Good morning, children. I hope you all are regular in video lectures and you are doing your homework regularly, and also you are making efforts to study video lectures thoroughly. This is our sixth lecture for chapter 6 that we have started from part 1 of your textbook, that is retirement or death of a partner. Yeah? In previous lecture, we had started with illustration 14. And today we are going to continue with same. You should watch this video carefully till end for complete understanding. I repeat this instruction in each and every video lecture just because the consistency of the subject does not get disturbed. You should watch all the video lectures from the very beginning, as I've always said that everything in the chapter, everything in the subject, all the chapters are related to each other. And obviously, as we are going to continue with illustration 14 for today, you should obviously have studied the first part of this sum, which is lecture 5, and we can say the first part of illustration 14. So we'll continue. This is your question. This is the old balance sheet. These are the adjustments. We have working notes here. Then we have prepared revaluation account, partners capital accounts, and a new balance sheet. It is new balance sheet. Alright? So far we have completed 3 adjustments. Yes? We have done the necessary posting even. They have clearly instructed what we are supposed to prepare. We are supposed to prepare revaluation account, capital accounts of partners, and the balance sheet after retirement of Ajay. Let us quickly revise. This is your question. There are 3 partners, Ajay, Alpa, and Amay. Illustration 14. You should keep your textbook with you while you study this video lecture. And I hope you have completed homework that was given to you in the previous lecture. It is very necessary. You should keep your textbook with you. You should open illustration 14 and please follow my instructions. Alright, 3 partners, their old ratio is 5:3:2. This is the old balance sheet. We have adjustments here. Ajay is the partner who retires. We have solved 3 adjustments. We have also calculated gaining ratio. We have written necessary effects in partners capital accounts, a revaluation account, and a balance sheet. Okay? Fine then. Let us see which is the next adjustment. It is taking longer a bit. Yes, we have adjustments here. Fourth adjustment. We have completed 3 adjustments in the previous lecture. The fourth adjustment, please pay attention. Fixed assets to be appreciated by 20%. Firstly, understand the meaning of the word appreciated. If you remember, there is a word depreciated, depreciation. What do you do in such case? It indicates a reduction in the value of an asset. So appreciated is just opposite to it. That means that the value of assets is to be increased. Yeah? And they say fixed assets are to be appreciated by 20%. Let us see how many fixed assets we have in our balance sheet. This is the balance sheet given in your question. Yes. Goodwill, this is the old value of goodwill, not to be considered for appreciation of fixed assets. You can see other fixed assets. It is 1 lakh. So these assets are to be appreciated by 20%. What is 20% for 1 lakh? Obviously it is 20,000. So increase in the value of an asset is recorded where? Obviously in revaluation account and on credit side. Below bad debt reserve they have written by fixed assets account 20,000. Yeah, we have understood everything about bad debt reserve, and below that it is written by fixed assets account 20,000. This is the first effect of your adjustment. Yes. So fixed assets will be recorded at a new value in the new balance sheet. You can see here, this is your new balance sheet. Fixed assets 1,20,000. 1 lakh plus 20,000. The second effect of your adjustment. Alright. Then adjustment number 5. The book value of stock is overvalued by rupees 600 compared to its cost. I repeat, the book value of stock is overvalued by rupees 600 compared to its cost. The cost of stock is to be recorded. Let us see the value of stock in your balance sheet. This is the old balance sheet. What is the amount of stock? It is 20,000 and they say that it is overvalued by 600 and you are supposed to record the cost price. Yes, that means they have shown higher amount of stock compared to what actually it is. So the first effect we are going to write in revaluation account. Debit side you can see to stock account 600. Why on debit side? Because the value of stock has been reduced. Logically, if you want to understand, the adjustment says that the amount of stock which is given in the balance sheet, it is already 600 rupees more and it is to be recorded at its cost price. Yes, so 600 that you have shown higher is to be reduced now, and reduction in the value of an asset is to be written on debit side of revaluation account. That is the reason we have written 600 on debit side of revaluation account. Talking about the second effect of this adjustment. The second effect for stock is to be written in balance sheet as 19,400. How? It is 20,000 minus 600. This is the cost of stock that we have recorded in new balance sheet. Alright, let us check the next adjustment. Yes, here we have the value of goodwill of the firm is rupees 1 lakh. this is the new value of goodwill. We have also understood this type of adjustment related to goodwill in the previous lectures. In the previous sum, that is illustration 13. The retiring partner is to be given his share of goodwill by existing partners in gaining ratio. So for this purpose, we have already obtained gaining ratio. Now talking about the share of retiring partner. Please check the working notes mentioned here, and you can also check them in your textbook on page number 233. We have understood first working note. It is about gaining ratio. How do we obtain that? It is new share minus old share. Yes, new share is given in your textbook as well as old share. So it is easy to obtain gaining ratio. Now talking about the share of retiring partner in goodwill. Firstly, who is the person retiring? Ajay. Ajay is retiring, so goodwill receivable by him, understand? It is 5 by 10. How? Let us check what is their old ratio first of all. Here is the question. This is your old balance sheet. Before this, they've mentioned 50%, 30%, and 20%, which makes 5:3:2 as old ratio of partners. So, on this basis, what is the share of retiring partner? The first partner is going to retire. So, the share is 5 by 10, right? Let us understand working note on this basis. The new value of goodwill is 1 lakh. So 1 lakh into 5 by 10, the share of retiring partner in goodwill, it is 50,000. Now here the twist is that we have obtained gaining ratio, but while calculating gaining ratio, we came to conclusion that both the partners are not gaining. One partner is sacrificing instead. And who is the person who sacrifices? Alpa. Generally speaking, what is the journal entry for the payment of goodwill to retiring partner? We have a specimen entry. It is always existing partners capital accounts debit to retiring partners capital account. This is how the journal entry is. Yes? So the journal entry should be the two partners, the existing partners, their capital accounts should be debited and retiring partners capital account should be credited. Yes? But the case is different here. From those two, one is gaining. Yes? And one is sacrificing. Yes? So the one who is sacrificing will also receive share from the one who is gaining. So the journal entry will change here. The journal entry will be like the one who is sacrificing will also be credited. Now Alpa is gaining, Alpa is sacrificing and Amay is gaining. So journal entry, if you want to write down, or else you can even check this journal entry on page number 234 of your textbook. Everyone, it is Amay's capital account debit 60,000, if you can see there, to Ajay's capital account, to Alpa's capital account, 50,000 and 10,000 respectively. Let us understand it in a clear way. Now who is gaining? Amay. The one who is gaining is supposed to pay to the retiring partner as well as the sacrificing partner. Alright? So Amay will pay. For this reason, his capital account has been debited. Amay's capital account debit 60,000. Now 60,000 how? Out of 60,000, 50,000 is for the payment of Ajay. The remaining 10,000 is the sacrifice made by Alpa. Please pay attention to the working notes. You can see there Alpa's sacrifice 1 by 10. So what is the new value of goodwill? It is 1 lakh. So 1 lakh into 1 by 10 gives you 10,000. So Alpa's capital account has been credited by 10,000. I repeat the entire journal entry. Amai's capital account debit 60,000. Why? Because out of this 50,000 Amai will pay to Ajay and remaining 10, that is the sacrifice made by Alpa, will be given to her by Amai. You can check this journal entry on page number 234 of your textbook. Alright, let us check the posting for this. Obviously, the posting for this is in partners' capital accounts. Now, if you remember the rule of posting, the one who has been credited in journal entry is to be debited. That particular effect is to be given on debit side of the ledger account. So, partners' capital accounts we are talking about. On debit side, you can see to Ajay's capital account, to Alpa's capital account, and the amount is written in the column of Amai. This simply means that Amai's capital account has been debited. Why? Because he paid 50,000 to Ajay. That is the reason we are writing to Ajay's capital account on debit side, and amount we are writing in the column of Amai. And same applies for Alpa. Talking about credit side, if you will check your journal entry, it is written Amai's capital account debit. So it is to be written on credit side of ledger account, and the amount is to be written in the column of Ajay and Alpa. Always remember, when you are posting such a type of journal entries, whenever you write down or on whichever side you are writing down the name of the partner, you can never write the amount in the same column. If you are writing Ajay's name on debit side, then you cannot write the amount in that particular column. You always have to write amount in the opposite column. Opposite to what? In your journal entry. If you are writing Amai's name, then the amount will appear definitely in the column of Ajay and Alpa. This way. Alright? This is a new concept. It is understood that it is going to take a longer time for you to understand. So what you can do is, this is a video lecture. You can repeat this again and again. Yes, you can even pause in between. You can watch it again and again. This will make your doubts clear. Otherwise, you can also ask me by writing in the comment section. Alright? Fine, let us see what is next. The next adjustment says, 7th adjustment I am reading. Ajay is to be paid rupees 10,000 in cash, and the 8th adjustment is only about new ratio. 8th adjustment we have already gone through. Yes, we have utilized it while obtaining gaining ratio. Talking about the 7th adjustment, this is a new adjustment. This was not present in chapter 5, nor it was a part of illustration 13 that we have completed for chapter 6. Now, if you all remember, in the first video lecture, or maybe the second, there was a concept regarding the amount payable to retiring partner. And I mentioned that I will elaborate this topic further in video lectures whenever necessary. So here is the time to understand that concept, which is related to this particular adjustment. Yeah? Fine then. Firstly, Ajay is a person going to retire from the firm. Sorry, yes. So he is supposed to receive his share from the firm. The amount of capital he has invested, interest on capital, amount of goodwill, whatever. You understand one point, that the partner is going to get separated from the firm now, going to retire. So whatever amount is payable to that particular partner should be cleared. And there are two ways for this. Either you pay cash, or else that amount is kept as a loan of the partner who is retiring. Yes? And in your given question, whenever nothing is instructed that how you are supposed to make the payment, whether you are supposed to pay in cash or you are supposed to keep it as loan, you are not instructed about anything in case, that time always it is to be kept as loan. Coming towards our sum, they have instructed that 10,000 is to be paid in cash. That means whenever we are going to total partners' capital accounts, the amount payable, the figure will arise when we will deduct the total of higher side from the lesser side. Yes, the payable amount will arise, and they say from that particular amount 10,000 is to be paid in cash. So definitely remaining is to be kept as a loan. Yes, this is also a new concept, but trust me, the sums that we are going to do ahead will make this concept clear. This is for the first time, so it is very possible that you are facing difficulties in understanding. But with revision, things will be okay. Alright, so this adjustment will be done when we'll total partners' capital accounts. Yes, so this adjustment will be done at the end. So before that, we should complete following all the steps required for solving a long sum. Yeah? Okay, let us see. Sorry. Here is your balance sheet. We are supposed to check the liabilities side. We have written capital, investment fluctuation fund, there was an adjustment. Workman compensation reserve, we have done. Creditors and provident fund had no adjustments related to it. So it will be written as it is in new balance sheet. I have always said, whenever there is no adjustment related to any particular item, it is to be written as it is in new balance sheet. You can see creditors 40,000 and provident fund 60,000 as it is in old balance sheet. Alright. Let us check further which are the items pending to be recorded. We are done completely with the liabilities side. Now we are talking about asset side. The old value of goodwill 50,000. You know this very well. The old value of goodwill is to be written off among all the partners in their old ratio. So 50,000 is to be debited in partners' capital accounts on debit side in their old ratio, the very first thing mentioned on debit side of partners' capital accounts. 25,000, 15,000 and 10,000 respectively. If you want me to dictate journal entry for this, it goes somewhat like this. Ajay's capital account debit, Alpa's capital account debit, Amai's capital account debit to goodwill account. So in journal entry, goodwill has been credited. So in the process of posting, it is to be written on debit side of partners' capital accounts. Yeah. Fine, let us see the next item mentioned, which is left to be recorded. Other fixed assets is done, investments is done, debtors is done, stock is done again. Cash balance we have 16,000 which is left to be recorded, and also our last adjustment, I mean the second last one, seventh adjustment is related with cash, with the payment of cash. Therefore, we are not going to write down the value of cash, an amount, or say closing balance of cash in new balance sheet for now. We'll write it later. Profit and loss account debit balance. You know how to deal with this now. Profit and loss account debit balance is to be written on debit side of partners' capital accounts. You can see to profit and loss account just below goodwill. This is to be written off again in old profit loss sharing ratio of partners. Alright? This is not a new thing. You should be aware of this by now. So we are completely done with old balance sheet. Fine. So which is our next step, that we are going to total accounts, balancing accounts. Okay. Revaluation account. What is the rule for balancing accounts? The total of whichever side is higher will be written on both the sides. You can check here. On credit side, you have 600 plus 20,000, which is 20,600. 20,600 minus 600. I request you all, please ignore any of the noise arising in background. So the balancing figure is 20,000. I mean the amount of difference. The amount of difference here is 20,000. How did we obtain this? It is 20,600 minus 600. So 20,000 is the amount of profit. Why it is considered as profit? Because here if you have seen, the total of credit side is higher compared to the total of debit side. Whenever the total of credit side is higher compared to the total of debit side, the balancing figure, I mean the amount of difference, is always termed as profit. Yeah? So this profit is to be distributed, is to be credited to partners' capital accounts in their old ratio. You can see 10,000, 6,000 and 4,000 respectively. Sorry, yes. So this profit is to be transferred in partners' capital accounts. On credit side, if you will see, the last thing mentioned is by revaluation account, which is 10,000, 6,000 and 4,000 respectively. Now what is the step? It is about totaling partners' capital accounts. So this is not a new thing again. The only new thing is about totaling retiring partners' account. So remaining two you can do it yourself, about Alpa and Amai. Okay, and you can write down balance carried down. Yes, the total of debit side will be deducted from the total of credit side, and the amount of difference, which is 46,500 and 11,000 respectively, will be written in the new balance sheet, the capital of existing partners. I hope you understand how did we obtain this. Talking about the total of retiring partner, it is very simple. The total of credit side is 1,27,500. You've deducted the total of debit side from the same, and whatever the balancing figure is, yes, from that 10,000 is to be paid as cash.
So it is written here on debit side, you can see to cash account and remaining amount as a loan. Alright, and 1,27,500 again on this side. It is that simple. The second effect for this, in new balance sheet, Ajay's loan you can see 77,500. And if we are talking about cash, the closing balance of cash, which we did not write previously, is 16,000 minus 10,000. Why did we deduct this? Because the amount is to be paid to Ajay. So closing balance of cash is 6,000. And finally, the total of your balance sheet is identical. Your homework for today is that you should finish writing this sum completely. Alright, we'll see you all in the next session soon. Till then, stay home and stay safe and study well.